Hey crypto peeps, hope you're doing well. Today's date is 14th of September 2023 and Bitcoin is trading at around about $26,300 right now, so it's pretty much sideways this past week. Okay, so with this, let's get straight to the news. Not a lot happening out there at the moment, so I thought I'd focus mainly on the ETFs and how that might affect the markets coming up. Okay, so let's move straight to the news. The first piece of news I have here today, papers-based news, is on Finbold, and an expert hints Bitcoin in sideways trading is preparing for a huge post-halving pump. As Bitcoin returns to its sideways trading pattern after a short drop to the low $25,000 zone, one cryptocurrency market analyst has shared what he believes to be an unpopular opinion, that the current trend is nothing more than a calm before the storm in 2024. Cryptocurrency expert Sept shared his analysis of the flagship decentralized finance, or DeFi, assets' previous movements, arguing that the longer sideways we go, the bigger the pump after the halving. He goes on here to say Bitcoin has witnessed massive bullish rallies following each of its halving events, which occur roughly every 4 years. Furthermore, the crypto analyst equated and observed the sideways chop with an accumulation of Bitcoin, adding that 2025 will be sick with all the liquidity from BlackRock, Fidelity, and Goldman Sachs, and all the other exchanges that are coming online with the ETFs that they've applied for. The analyst specified that the EU banks will be able to put 2% of their total capital into Bitcoin, referring to the landmark decision by the Economic Affairs Committee of the European Parliament that would officially bring Bitcoin into the mainstream financial system. There's lots more details there if that story interests you, and to do some more research. As with all these stories, check out the links below and you can look at them in full. And please do that. Please do your research. I'm just reading little snippets or little bites of this information for you here today. The next story I have here for you today is what is a spot Bitcoin ETF. You've probably heard a lot about this lately, so I thought I'd go through this with a little bit of you. So read this as well, familiarize yourself, because this is going to make massive changes to what we're doing here with cryptos. So exchange traded funds, or ETFs, are investment vehicles that track specific assets or commodities. In the context of Bitcoin, ETFs offer an avenue for investors to gain exposure to its price movement without actually holding the cryptocurrency. Instead of navigating cryptocurrency exchanges and wallet setups, investors can buy shares of a Bitcoin ETF through conventional brokerage accounts. This ease of access could bridge the gap between traditional finances and Bitcoin. The Securities and Exchange Commission has given the green light to several types of Bitcoin ETFs, especially those based on futures contracts. And futures contracts ETFs don't provide direct ownership of Bitcoin. Instead, they track futures contracts that predict the cryptocurrency's price at a future date. These contracts must be traded or replaced as they near their expiration. Now, despite this progress, a spot Bitcoin ETF, which would track the actual current price of Bitcoin, remains elusive. Numerous applications have been denied, with the SEC citing investor protection and public interest concerns. Now, while ETFs and trusts both offer Bitcoin exposure, their structures and regulatory frameworks differ. A Bitcoin trust is a closed-ended fund that invests solely in Bitcoin. The trust shares, such as those by Grayscale Bitcoin Trust, are not redeemable for the underlying Bitcoin. As a result, trust prices can deviate from Bitcoin's value. In contrast, a spot Bitcoin ETF is an open-ended fund with a more dynamic share issuance system. It aims to track Bitcoin's spot price, and ETF shares can be issued or redeemed based on market demand, helping to ensure the ETF price aligns with Bitcoin's actual values. So moving ahead here, so the challenges in spot Bitcoin ETF approvals. Despite the increasing acceptance of Bitcoin, the SEC remains cautious about approving spot Bitcoin ETFs. Past applications often lacked a surveillance sharing agreement with significant regulated Bitcoin markets, which the SEC sees as crucial to prevent market manipulation. Recently, with BlackRock's filing for the iShares Bitcoin Trust, which included provisions for these surveillance sharing agreements, the environment seems more favorable for approval. The expectation is heightened by BlackRock's impressive record of ETF approvals. And out of 575 ETFs submitted by BlackRock, the SEC has only rejected one, and that's a notable track record. Introducing a spot Bitcoin ETF could reshape the Bitcoin and broader financial markets. And as an example, it goes on here, I'll talk about SPDR Gold shares. So SPDR Gold shares launched in 2004, and it rapidly accumulated over $1 billion in assets. By 2010, which is 6 years later, its assets under management surged to $50 billion. While accounting for only a fraction of the global gold supply, gold ETFs drastically impacted gold trading dynamics, offering enhanced market volume and liquidity. Drawing parallels, a spot Bitcoin ETF could introduce a new era of Bitcoin adoption and increase its market liquidity. And this is what we're all going on about, guys. This is the change we've been wanting for a long time, which would be massive adoption of Bitcoin and cryptocurrencies. So if all this interests you and you want to know more, please read that article in full. It's good to know what's happening with these ETFs and how that's going to reshape cryptos and our industries. Okay, so now moving on to my next piece of news. This is on AMB Crypto. Bitcoin ETF. Institutions rush in as new filings ignite a frenzy. Bitcoin spot ETFs have garnered significant attention due to a growing number of institutions applying for this service. Although the SEC's approval process has been moving slowly, the recent favorable ruling obtained by Grayscale could inspire more ETF applications, as evidenced by the emergence of a new participant in the market. This just goes on to some details. I'm not going to read all this for you, but it talks about BlackRock here. We know BlackRock and their big ETF application. I went through that in my previous news story. Then July witnessed a flurry of filings with VanEck, Fidelity, Invesco, Galaxy submitting applications to the SEC. And additionally, Frank Templeton recently joined the BTC ETF race. This latest filing has generated considerable excitement in the market. On the 11th of September, Franklin Templeton entered the competitive arena by filing for a Bitcoin spot ETF. This move made them the most recent traditional asset management company to enter this crowded space. And it goes on with more information here. Here's the Templeton application and here's their tweet about it. But essentially there are now 11 of them out there. So it's becoming a crowded space. Everyone's, wanting to have these Bitcoin ETFs. They are going to happen. This is going to happen. And when it does, Bitcoin and other crypto prices, they are going to rise significantly. So great news for us. Keep an eye on it. Read that. As I said, the links are below. Check this information out. Okay, so moving on here to TechCrunch, and this is my last paper-based piece of news here. Not a lot happening because everything's going sideways at the moment. But Telegram adds a self-custodial crypto wallet worldwide, excluding the US at this time. But Telegram, the popular chat app with 800 million monthly active users, is getting a self-custodial crypto wallet. The move is set to solidify its presence in the vibrant crypto community that has emerged from its chat platform and can potentially help drive the masses into the crypto space. Telegram announced the new self-custodial wallet called Ton Space on Wednesday at Singapore's Token 2049 crypto conference, and that had around about 10,000 attendees to that. Starting in November, Ton Space will be available to Telegram's global users without the need for any wallet registration. This feature is an extension to the existing custodial version of the Telegram wallet, which has amassed 3 million registered users so far. The self-custodial wallet has excluded certain jurisdictions for now, such as the US, which has launched a series of crackdowns on the crypto industry and promoted many crypto apps to geofence users from this market. More information on that if that one interests you, and if you're a Telegram user, as it says there, I use it myself. A great resource. 800 million people are using it, and they're now going to get access to a crypto wallet which is self-custodial. Very interesting breakthrough news on that one. So now we're going to move on to some video-based news. My first video-based news here today is on Coin Bureau, crypto news price, spot ETFs, Solana, China, and a lot more there. So lots of really interesting information. Goes on for around about 21 minutes. Fantastic resource. Subscribe to them. They're really, really good. My second piece of news here is on Altcoin Daily. And again, this is a really good piece of news here. This goes on for 39 minutes. And it's the real reason cryptocurrency is going down and an outlook for 2024. It's long at 39 minutes, but it's a great channel. Subscribe to them. They really know what they're talking about. My third piece of news is again going back to the Coin Bureau. This goes on for 24 minutes. And it says, watch out, they're lying to you about inflation and the economy. Really informative, fantastic channel. Subscribe to them as well. Full of information. So that's it for the news this week. Not a lot happening. It's going sideways. Crypto, and especially Bitcoin, is holding its edge out there. Everyone's pretty much waiting to see what happens with these ETFs and if they get approved. And well, I shouldn't say if, it's when they get approved. It's going to have a massive impact on the industry. So be careful out there. Do your research. If you like what we're doing here, click that button, subscribe, ask questions, comment. We love you guys. Thanks for your support. Be careful out there, and we'll see you next week. Take care.